you hope that they bring this to you before the end of the year so that you have more options to do to try to minimize that tax if that's the goal, which I'm assuming that is the goal. So you want to make sure you do a lot of I tell clients a lot of the little things, right? The common things that any business owner should be doing anyway. Making sure you're capturing all your expenses, making sure your accounting is squared away so you can analyze it. Looking at different things that are available, like retirement plan options, and can you maximize those contributions? There's different levels of different things that we can do. There's what I consider advanced tax strategies, and they can fall into different categories, whether they're deductions, whether they're credits, structuring a new business in a way that generates a big loss the first year, which is very attractive, especially if you have big capital gains or even ordinary gains, but say you sell, buildings or your business, and that's really where I got into those advanced tax strategies, because that's what would happen. Sell your business, you've got ordinary gain, you got capital gains, and they're usually pretty substantial. You're going to lose a lot of those dollars to taxes. And so how can we save these business owners a significant amount of tax at that time, when they transact this business, and probably the biggest asset they've ever had. It always comes down to how much money are you going to keep. So there are some pretty cool things though that you can do that fall under those, advanced tax strategies. And some of those you have to be at have a certain taxable income to make it make sense. But you got to plan, and that's the big key is, it's tough to do a lot of this after the fact. We don't know about somebody's tax, what happened during the year, where they're sitting. It's really hard to really advise. If we look at their stuff after the end of the year and we're trying to prepare the tax returns and we notice things like that, we're like, man, what a missed opportunity. If they would have just talked to me about it, prior to the transaction, or even if transaction is done, but we still have a little window before the end of the year. Those are the ones that hurt a little bit, because you really would like to help them. You'd like them to keep more of their cash. Ultimately, we just really want to help people. It's almost like sometimes we care more than our clients care about, their taxes, their accounting, their tax bite. Most CPAs are that way, at least the ones I know. And I know a lot of them. So, and even if it's a one-time off deal, you sell your business, that's a big deal. Doesn't happen all the time. That's where you really need to engage those advisors, to help you through that. And whether it's on the exit plan, whether it's on the tax mitigation piece, or, you need good attorneys to review all the documentation and make sure you're not at risk for things, and that sort of thing. And you got to really rely on those professionals. And it's sad when you don't see that happen, but it's great when it does.